channel. So today's topic is silver bullet strategy from ICT himself. We all learn this strategy from ICT, so I'm here to explain it to you in a more simpler way. Now, the strategy comes with rules and regulations that are going to guide you in using the strategy. You do not need any daily bias. You don't need to know what the daily bias is telling you. You just know you go to the market and you execute what you see in the market. Now, the time. Identify your New York session 10 a.m. to 11 a.m. You can set your timing to New York session. Okay, there's a mistake here. To New York session. I will show you how to do this. Liquidity. Identify the most recent 1 minute buy side liquidity and sell side liquidity that price has created before the New York session started. Wait for the clear, that's a change of character or a shift in market structure and plus a displacement. Stop loss above opposing liquidity. Now we're going back to our chart, which I want to show you how it is done. But firstly, on your indicator, you are going to look for what they call session. I hope you can see what I'm typing here. Session by Lux Algo. Can you see it here? You can tap on it and add it to your chart. I have mine here. Now you can go to your setting. I'm going to put mine on. You can go to your setting, put in your, you can go off your London session, off the Tokyo, Sydney, and set your timing for New York session for 10 a.m. to 12, sorry, from 10 a.m. to 11 a.m. Now, these are my own timing. It is alerting me all the sessions that market is going to react in those scenarios. Now, let us look at the chart very, 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 very well. If you look at the market here, right, do not forget how market moves in the market. Higher high, higher low, right? Let me close this down here for you. Now, market moves as higher high, higher low, higher high, higher low, higher high. This is what we call our buy side liquidity. This upper section here, these are buy side liquidity, this upper section here, and these are sell side liquidity and our sell side liquidity. Now, on the opposite scenario for a sell, lower low, lower high, lower low, lower high, lower low. This is what our sell side liquidity, these are sell side liquidity, these are buy side liquidity, and these are buy side liquidity. Now, in the chart, this is the time that market has created this zone. And what do I see in the market? I see what? I see a shift in market structure here. And what happened? A shift in market structure here. Can you see that? There was a shift in market structure here. That was a BOS. But what happened before the time, before the timing for the strategy activated? There was what? A grab of liquidity. Can you see that? A sell side liquidity was being grabbed. What are we going to be doing? We are going to wait for a change of character based on the rules and regulation that we have here. We are first, I forgot. On your chart, if you look down below your screen, you will see a timer counting time zone. Can you see that there? You tap on it and you look for New York session. You can see it there. I don't know if you can see my screen. Let me reduce the frame of the whole screen. You can see it. You can see it there. You can see it as 4 minus 4. That's the New York session there. What did I do? I tap on my timing here and I tapped on New York session, and that was what signaled me that yes, my chart is on the New York session timing. Now there was a break of structure here, a shift in market structure, sell side liquidity has been taken. So what am I going to be looking for inside this zone? I'm on 1 minute time frame. Please be on 1 minute time frame. It saves you a lot of stress and headache. What are you going to do on this time frame? You'll be waiting for a shift in market structure because market has taken a sell side liquidity. A sell side liquidity has been taken. We're only following the rules here. Sell side liquidity. Identify the most recent 1 minute buy side liquidity or sell side liquidity that price has created before the New York session started. Right? That's our timing. Then you'll be waiting for a shift in market structure or a displacement in market structure, which took place here. Can you see it here? Which took place around here, right? That's what you are going to be waiting for. A shift in market structure which took place here. What are you going to be waiting for next? You're going to be waiting for market to what? To come back into an institutional reference point. Either a breaker block, either an order block, either a fair value gap. But I advise you to go for more of fair value gap because it saves you, it's more of a stronger confluence to you. This is also, you can take this side as a change of character for yourself also, this direction here, or you can use this inner one. So sorry, my lines are not straight. You can do this one, or you can use this inner one here. And what happened? You can put your entry here. You can put your entry here and put your stop loss above. Is the rules. Can you see it? Wait for a change of character or MSS, that's a shift in market structure or displacement. Stop loss above the opposing liquidity. What are we doing here? We'll put our stop loss above here. Can you see that? And what will you be doing? You'll be targeting the old highs, the old lows, sorry, old lows as your form of liquidity, your form of take profit. Liquidity here, you tap your old lows, you tap on your old lows as your liquidity for your take profit. You can tap on all those places that you take profit. You can take your profits, take your profits, take your profits in those areas. Can you see it? In those areas, you keep taking your profit. Let's give you a 1 to 7 good trade. Let me go to another example to show you again. And if I'm that timing. Okay, this is another timing here. This is another timing here. Okay, break of structure, break of structure. Okay, this was the break of structure, a sell side liquidity. And what are we going to be looking for here? In this scenario here, we would have hit a stop loss. Why? Because market did what? A sell side liquidity here, would have hit a stop loss, and there was a shift in market structure around here. Your entry would have been here. Let me use it as an example for you. There's a break of structure, which was our sell side liquidity, higher high, higher lows, change of character, break of structure here, sell side liquidity. We're waiting for a change of character in this time frame. We would have entered around this fair value gap. This is the volume fair value gap. Would have entered around that side. It depends on how your risk management is and how your, oh, I'm so sorry about that. Here's long position there. Put your entry here, target here, and we'll be targeting the highs. We'll target the highs. You can see market didn't get there, so it would have been a wonderful stop loss for us. But let me go around and show you more examples. Okay, another example. Okay, now you can see here, before the market opened, what happened? There was a what? There was a break of structure. What are you seeing again? You are seeing what? You are seeing a break of structure. What are you seeing again? You are seeing what? You are seeing a break of structure. What are we waiting for? We're waiting for market to do what? A change of character for us. Market shifted. Market shifted what? Market shifted what? Market shifted its trade. Okay. Market shifted the structure from here. Can you see? There was a change of character here. But don't forget also there's what? A break of structure. So you have three institutional reference points you can be targeting. You can be targeting this other block, that's the first one. You can be targeting this breaker block, the second one, and also there is also an inside volume imbalance inside this place here, a volume imbalance inside here. You see how easy it is. You don't need any daily bias. You don't need any daily bias for this kind of scenario. And your stop loss will be above here, and your take profits will be all these lows. All these lows are your take profits. 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 And you target them. You keep targeting all the lows as your take profits. So I hope this video was beneficial to you. Do not forget to take note of all the, this is what you need for the strategy. It's very, very, very straightforward for you to understand. Ask your question on the comment section, or you can email me. I'm going to try my best to reply all messages. So thank you so much.